Yeah, the market did the herky-jerky, just like we said it would. Hey everybody, Courtney Smith here, and there's nothing herky-jerky about this disclaimer, so live it, love it. Okay, let's talk about the markets here. So the market did the herky-jerky just like we were talking about. We talked about how a lot of the underpinnings of the market were kind of getting shaky. They weren't like really, they weren't as strong as they had been. One of those factors that we were talking about was this chart right here, where you see the purple predictor was no longer bullish. It was neutral. It wasn't really bearish, but it was kind of coming under pressure. Now, notice on Thursday, we had some good price action up, the highest prices we've gotten to in a week, and it looks like this little dip might be over. So I don't want to say everything's all clear, but I'm getting much more bulled up again, looking for another leg higher. That little dip was all we were going to get. Similar thing, this is the Dow Jones. You can see the purple predictor, pretty much neutral at this point. Price action, okay. Let's get on to the Nasdaq. Now, the Nasdaq is leading the way higher on the back of stocks like Apple and other, Amazon. I mean, really the whole market is really just Amazon and Apple right now. And you can see that the price made a new all-time high in the Nasdaq. Unbelievable. As we've been saying for quite some time, we want to be in these Nasdaq type stocks. Technology, that's where we want to be. We don't want to be in Dow stocks or S&P stocks. We want to be in these types of stocks. This is where the action is, and where the action is where I am. Now, seasonality, we still have it on a neutral signal. We're going to have to break to new highs to turn it back to bullish. I expect that to happen. You can see that on Thursday and Friday, we had explosive price action here in the Russell 2000, but we need to get to a new high before I'm willing to turn it back to bullish. Now, we had been bullish for months, which it enabled us to have double-sized positions. We went back to normal-sized positions. If we break through those old highs up around, let's call it 150, 80, something like that, we'll go back to bullish and we'll double the size of our positions again. Seasonal patterns, all bullish right now. Now, see, part of the reason the market had done so well was our yield curve indicator was moving higher. Now you can see that it ends kind of in the middle of December and then engages in a long downtrend to September. So what that's telling me is that we're in the midst of a very explosive period, but that explosive period is going to end before the end of the year. And then next year, just based on this indicator, is not going to be the greatest year in the stock market. It's going to be kind of that kind of thing. Asset allocation. Still don't like this. This was one of those things that we talked about that was looking a little weak. Still looks a little weak to me. Still not one of the positive things I'd like to see. Stock market risk indicator, we talked about this last week with the breakdown, but it did rally sharply, showing when we see the risk indicator going up, that is good for the market. When we see it going down, that is bad for the market. When the risk indicator is going up, it shows that people aren't hunkering down. It shows that they're looking to be aggressive. They're looking to make money in the markets. Global shares breakdown. Now, this is very interesting because whereas we saw the Nasdaq make a new all-time high, we saw the S&P and Dow do pretty darn well, here the global shares are now making lower lows. So this looks awful. Bonds showing, look, they broke down massively with that big gap down after hitting the resistance. We talked about that before. I thought they would continue to move lower last week, but instead it turned around and started to go higher. The purple predictor is insanely bullish. As you can see, it's high and rising. So it looks to me like maybe we're going to see bonds move higher, maybe up into the 128.5, 129 level if we get through the resistance at about 126.75. A breakthrough there. Now, what are the fundamentals telling us? Well, the blue line has been the most important indicator, and the blue line is the 10-year Treasury in Germany. The green line is our Treasury here. Now, last week, I pointed out the fact that the U.S. Treasury interest rates had rebounded up sharply, but that the Germans had not. And I pointed out that divergence. It looks like the divergence is going to be resolved in favor of the German 10-year interest rate. And so I would look for lower interest rates now in the bonds. Now, that's going to cause ripples throughout the universe. One place is that if we have lower interest rates, that's going to crack the dollar. So it looks, and we broke the uptrend line here, as you can see on Wednesday, and we did not reach the Head and Shoulders bottom objective at all. So the Head and Shoulders, it's not a complete failure yet. Excuse me. Oh, boy. But this certainly is bad price action. So rather than being bullish, I've got to shift over to at least neutral. Now, if the dollar is weak and interest rates are going lower, that's bullish for gold. And look what it did on Friday. It opened on the lows, closed on the highs. I'm now officially bullish on gold, and I believe that we're going to break through that solid green line. Now, why did I draw that line? Well, that was the most recent significant highs. But you see, I've got those little squiggly green lines, and that's showing you that there was a failure bottom. When the price came down on the right-hand squiggly line, it's supposed to, if it's a real bear market, it's supposed to break to new lows, but it didn't. A break through the horizontal green line would be confirmation that a failure bottom has been put in place, and that this stuff is going to go back up to the old highs at 1360 plus. I think that's exactly what's going to happen, so I'm getting all bulled up on gold again. Now, furthermore, by the way, December has gotten, I think, 29 out of the last 30 years, platinum has been higher. So we're going to get into a super bullish period for platinum. I think that's going to help out the gold market as well. Now, also, a couple things here. First of all, the top indicator is the euro. This is our gold indicators. And you can see that recently it's been starting to move up. CRB drifting ever so slightly down. But more importantly, the one down at the bottom, the yen is skyrocketing. And that's the one with the highest correlation with gold right now. And you can see the gold market is going up just at the same time that the yen is starting to skyrocket. So this is giving us further impetus to be long gold. Oil, I was getting bearish last time. The market did sell off. I think it's going to be very difficult to move much higher. So I'm kind of saying big trading range, but with a bullish bias. All right, freebies. Come on. Get in with the cool kids. You know that's where you want to be. You know that's where you belong to be. So why don't you do it? It's peanuts. It's less than a Starbucks coffee every day. $1.50 a day. Big deal. Come on. You can handle it. And think of all the money you'd be making. All right, freebies, thanks very much. Really appreciate it. Fully paid up members, hang in there. And we want to welcome all the new fully paid up members. There's so many of them flooding in. They're hearing about the tremendous track record we're getting and want to be a participant in it. So we're very excited to have you here and welcome on. So fully paid up members, hang in there just a second and we'll get with you.